Yes, maybe first of all, to remind ourselves what we said, as far as the preparation of the ledger account is concerned, we said ledger account basically these are accounting records, which basically summarizes similar transactions. So similar transactions basically recorded in a certain ledger account. And actually, we say the ledger account do have basically a debit and a credit side. And we said on both the debit and the credit side, we record the date, the details, and also what the amount. Now, what we say is that when preparing the ledger account, we prepare them in accordance with a rule of double entry, or basically the double entry concept or the unity concept, which we said is a concept which states that for every transaction or each and every transaction will have to affect two ledger accounts. One of the ledger accounts will be debited, the other ledger account will be credited. And therefore, we say that once you're given a number of transactions, you're required to record them in the ledger account. You need to ask yourself two questions. So, number one, you need to ask yourself which two ledger accounts will be affected by that transaction. You must identify the two ledger accounts to be affected. And then from there, we say you then ask yourself which account are you going to debit, which account are you going to credit. And basically, in this case, I showed you how to identify the account to be debited and basically the account to be what? To be credited. So having that, I want us to go straight to this illustration one. And basically, we're going to move a little bit faster because we were able to go through the entire question. We identified the two ledger accounts to be affected, and also we identify the ledger account to be debited and the ledger account to be what? To be credited. So, but we first of all go through it. We see what you're told. And the question is, or basically, we are told, prepare the relevant ledger account in the books of Mcash Enterprises to record the following transactions for the year which ended 2020. So basically, you're given the transaction from June 1st, basically to June 30th, to June 30th. And basically, from those particular transactions, what you're required to do is we prepare the relevant ledger account. So we're going to start with the first transaction where we are told started a business with shillings 50,000 in the bank. So basically, we said, first of all, identify the two ledger account and then identify the ledger account to be debited, the ledger account to be what? To be credited. Now, we said that transaction basically will affect which account? First of all, it will affect capital account. And number two, it will affect what? The bank account, of which we say these two items. The capital is increasing and also the bank is what? Is increasing. And basically, remember, I gave you a small table here which you can use in terms of knowing the account to be debited, the account to be credited, because we say these transactions will be affecting one of the items within the accounting equation, either asset, liabilities, or capital. We said a transaction can cause any of these items to increase or basically to do what? To reduce. We said an increase in assets is debit, whereas an increase in capital and liabilities is what? Is a credit. A decrease in assets is a credit. An increase, that is a decrease in liabilities and capital, is what? Is a debit. Is what? Is a debit. So therefore, we say because capital here is increasing, we credit, and also the amount of money in the business bank account is also what? Increasing. So this is an asset. So once the asset increases, we do what? We debit. So therefore, in that case, we need to open two ledger accounts there. The first ledger account we need to open is the bank account, and the other one is basically what? The other one is the capital account. The other one is the capital what? The other one is basically the capital account. The other one is the capital what? The capital account. The other one is the capital account. Yes, so let's open those two ledger accounts. So we start with the first one, which is the capital account. The capital account. Capital account. I hope you can be able to see up there. Yes, capital account. Capital account. So this account do not have so many transactions. So basically, it can be just a small account, And then from there, we have the bank account. The bank account. The bank account. So for the bank account, here we may have a number of transactions. So that account will be a little bit bigger compared to capital. So this is the debit side, whereas this is the credit what? This is the credit side. So then from there, we have said which account are we debiting? We are going to debit bank account, and then we credit what? We credit capital. So this account here will be credited. To credit, we record that transaction on this side, on the credit side. And basically, the date is 1st of June 2020. And then in the details column here, I say we record the name of the other account being affected, because we said in terms of how we record those transactions, we start by recording the date, details, and the amount. Details and the amount. What do we record in the details account? In the details account, we record the name of the other account being affected. For example, the other account which will be affected here is which one? Is the bank. Is the bank. So the amount is how much? The amount is 50,000. So then we debit this account. We first of all record the date, 1st June 2020. In the details, we write the name of the other account which is being affected, which is basically capital. And then we record what? We record the amount. So you can see that particular transaction here has been recorded using the concept of double entry. That transaction has affected two ledger accounts. One of the ledger accounts has been debited and the other ledger account has been credited. So we go to the other transaction, we do the same. So we are told bought a motor van, paying by check shillings 12,000. A motor van. So basically we say that one will basically affect what? This one will affect what? This one will affect, once you join, make sure you mute yourself. Yes, so that one will affect the bank account. The bank account, and basically the other account which will be affected there is the motor van account. Motor van, basically, we say it is an asset. So once you buy an asset, what happens to the value of the asset? The value of the asset increases. So therefore, the motor van here will increase. And because it's an asset, once the asset increases, we debit. And then bank is still an asset. And because the amount of money in the bank was used in terms of paying for this motor van, the amount of money in the bank do what? Reduces. So therefore, once the asset reduces, we do what? We credit. We credit. So therefore, we are going to credit the bank account and then we debit the motor van. So if you check in our case, we have already opened the bank account. Do we need to open another bank account? No. So we are not going to open another bank account. So we just need to credit this one. The bank account which I've already opened on 2nd of June 2020. In the details column, we write the name of the other account being affected, which will be motor van. And basically the amount is what? Is 12,000. And then from there, we open the motor van account. The motor van account. The motor van what? Account. In case of any question, please type it in the chat box. This is a very, very important concept. You have to understand this. This is basically the foundation of accounting, of financial accounting. You must understand this concept of double entry. This is a very, very important concept. So this account here, remember, this would be our credit side. This is our debit side. So this account has been credited. Automatically, we debit this on 2nd of June 2020. In the details, we are going to write the name of the other account being affected, which is basically bank. And the amount is how much? The amount is 12,000. The amount is what? 12,000 like that. 12,000 like that. So we are done with that transaction. Let's move to the other one. Let's move to the other transaction. Let's move to the other transaction. We move to the other transaction. To the other transaction. So in the other transaction, what are we told? We are told that bought pictures, shillings 4,000 on credit from office masters. Now we say that will affect two ledger account. One is the fixtures, because it's an asset account and fixtures are automatically increasing. We debit that account, and then the other account being affected is office masters. Is office what? Masters. The two ledger accounts will be affected. Fixtures, basically, which are assets, and because this business bought fixtures, which are assets, our assets are increasing, so we debit this. So then the other account which will be affected is the account of a creditor, or basically the account of a supplier, who is known as office masters. Basically, this business here, because it never paid for these fixtures, this supplier is known as a creditor. If you buy goods from a supplier on credit, you owe that supplier some amount of money, so that supplier to your business is a creditor. A creditor is a liability because you owe that supplier some amount of money. So the amount owed to this particular supplier has increased, and basically the amount of money owed to a supplier is a liability. So once the liability increases, we do what? We credit. We do what? We credit. So we're going to debit fixtures account, we credit office masters. Have we opened any of these two accounts? No. In our case, you can see none of those two accounts has been opened here. So we can start by opening the fixtures account. The fixtures account, and then from there we will open the other account, which is basically known as the office masters account. So this will be the credit side. This basically will be the debit side. the debit side. So then from there, we need to open the other account. Yes, can we open the other account here? Yes. The Office Masters Limited. Remember Office Masters Limited, I've said these are creditors. Creditors account. Creditors account. Remember I said the short form of the word account is A/C. A/C, that is the short form of the word what? Account. So the short form of the word what? Account. Yes, so this basically will be the debit side. This will be the credit what? The credit side like that. So basically, we are saying the fixtures account will be debited. The date is what? The date is the 5th of June 2020. And then the other account to be affected is Office Masters, an amount of how much? An amount of 4,000. And then we credit this account the same date. So in the details, we will write the name of the other account being affected, which is fixtures. And the amount is what? The amount is 4,000. The amount is forward 4,000. So basically, we are done with that. So we move to the other transaction we are told. That is on 8th, bought a motor van on credit from Motorcars Limited, 8,000. So that will affect which two-ledger account. So the two-ledger account to be affected there will be the motor van account. So motor van is same with a motor vehicle. So a motor van is an asset. Once you buy a motor van, your motor vehicles increases, and because it's an asset, an increase in an asset is a debit. And then this motor van was bought on credit. So which account will be affected? The other account to be affected is an account called Motorcar Limited. And Motorcar Limited, in this case, this will be a creditor. This company will be a creditor. So this company is owed money by our business here, which is known as Mcash Enterprises. So therefore, because this creditor is a liability, we do what? We credit. We credit. So have we opened any of those accounts? Yes. So we already have the bank, this account here, the motor van account. So we will not open a separate one, but basically we need to open the other account called the motorcar. So let's first of all we record that transaction in the motorcar. Motorcar we debit. So the date is 8th June 2020, and the other entry will be in the account called Motor Car Limited. Basically, an amount of how much? An amount of 8,000. An amount of 8,000. So then from there we need to proceed, and basically we open this account, which is called Motorcar Limited. Motorcar, basically we are saying this is a creditor account. This is a creditor account. A creditor account. Yes, so this particular account here will be credited. So will be credited. The date is 8th June of 2020. The other entry is in motor van account with an amount of 8,000. With an amount of 8,000 like that. With an amount of 8,000. With an amount of 8,000 like that. Yes. So basically we are done with that. So we move to the other transaction. We move to the other transaction, and I hope you're together up to that point. Betty, Charity, Maria, Charles, Eroto, are we together up to that point? Are we together up to that point? Yusuf, are we together up to that point? Are we together up to that point? Are we together up to that point? Are you able to understand what Morimo is doing here? Mary, are we together up to that point? Charity, Yusuf, are we together up to that point? If yes, please let me know in the chat box. Are we together up to that point? Are we together up to that point? Okay, so we move to the other transaction. We move to the other transaction. In case of any question, type it in the chat box. I'll be able to see it. So the other transaction on 12, we are told took 1,000 out of the bank and put it in the cash till. We said that this basically will affect the bank account and the cash. The money in the bank basically will reduce because this money which was withdrawn from the bank to be used in the office. So the bank balance will reduce, the amount of money in the bank will reduce, whereas the amount of cash in hand will do what? Will go up. So that will affect which two-ledger account? The first ledger account to be affected there is basically the bank account. And the other one is what? Is the cash account. The other one is the cash what? Is the cash account. Is the cash what? Account. So the bank account here basically the amount of money in the bank reduces. So what that means that we credit the bank, the cash in hand increases. We do what? We debit. Because these two items, cash in hand and also the bank balance or the amount of money in the bank, both of them are assets. So the amount of money in the bank is reducing, we credit, and the amount of cash is what? Increasing. So which account have we opened here? We already have the bank account. We're not going to open a separate one, but basically we need to open what? We need to open the cash account. We need to open the cash account, the cash account, the cash account. So this will be the credit side, this will be the debit side. So we are saying we debit the cash account, we debit the cash account. The date is 12th of May of June 30th, 2020. So the other entry is the bank. I've said in the details column, we write the name of the other account being affected. So the amount is 1,000. So we debit that, we credit bank. So we have bank account here. So we have cash, an amount of how much? An amount of 1,000 like that. Yes. So we are done. So we go to 15th, we are told both fixtures paying by cash, sharing 600. So which two ledger accounts will be affected here? One is the cash. One is the cash. The other one is what? The other one is the fixtures. What will increase? What will reduce? One, fixtures were bought. Fixtures were bought. The fixtures, basically these are assets, and basically they will increase. So what do? We debit. Assets are increasing. As per our table here, we do what? We debit. Cash is reducing. So this is an asset still. When the asset increases, we do what? We credit. So do we have those two accounts? Yes. So we already have the fixtures account here. We already have the cash account here. So we need just to post that transaction. So in the cash, we credit here. The date is 15th of June 2020. So in the details column, we write fixtures, an amount of 600, and then we debit. We debit fixtures here, 15th June 2020, and basically it is cash, an amount of how much? An amount of 600. So then from there we are told paid, we go to 19th, we are told paid motor cars limited by check shillings 8,000. So that will affect which two ledger accounts? One, the bank account will be affected because there was a payment through check. And then who was paid? The person who was paid or the company which was paid was this one, the motor cars limited. Actually, the full amount was paid, motor cars limited. So in this case, the amount of money in the bank is reducing because we have a payment. So we credit this. Automatically, this account will be debited. Remember, this is also a liability. Once you pay a creditor, the amount of money you owe to that creditor reduces. A creditor is a liability. Once a liability reduces, as per our table here, a liability reduces, we do what? We debit. So we debit this account, we credit bank. So you can see we already have those two accounts. So we credit bank here. The date is 19th of June 2020. So the other entry will be the account of motor cars, limited 8,000, and then we debit this account, 19th of June 2020. So the other entry is in bank account, an amount of how much? An amount of 8,000. We are done with that. So we move to the other transaction. We are told a loan of 1,000, that is a loan of 10,000 cash was received from J. Marcos. So here we have a loan. So we are going to open an account called loan from J. Marcos. From J. Marcos, or basically just the loan account. We can just refer to it as a loan account. Let's just refer to that as a loan account. And then this amount was received in cash. So our cash will increase because we have borrowed money. So once cash increases, we debit. And then we have borrowed money. Once we borrow money, that is a liability to our business. So the amount of loan has increased. So once a loan increases or a liability increases, we do what? We credit. So we credit to the loan account, we debit cash. So which account do we need to open here? We already have the cash account. Do we have the loan account? No. So we need to open their own account, their own account, their own account, their own account. We will just refer to that as their own account, their own account. Yes, so we credit this account. The date of the transaction, the date of the transaction is basically 21st of June 2020. So the other entry will be in cash, basically an amount of 10,000. 10,000, and then we debit cash. Where do we have cash? We have cash account here. So this is the loan, 10,000. So 10,000, 10,000 like that. Yes. So we are done. We are done. So 25th, paid 8,000 of the cash in hand into the bank account. So this will affect which two ledger accounts? The two ledger accounts to be affected here. One will be what? Will be the cash account, and number two, the bank. Because basically what happened is that the amount of cash in hand was taken and deposited into the bank. So the amount of money in the bank will increase. And because this is an asset, once the asset increases, we do what? We debit. The amount of cash in hand reduces. This is an asset. Once the asset reduces, we do what? We credit. So we will credit the cash account. We debit the bank account. So where do we have the cash account? We have it here. We credit it on 25th of June 2020. The other entry will be in the bank account, an amount of how much? 8,000. So then we debit bank account here, 25th June 2020. So the other entry is in cash account, 8,000. 8,000. So finally, we are told fixtures, both fixtures paying by check 3,000. So the two accounts to be affected here is the fixtures. And I hope there is no transaction as skipped there. I hope there is none. Yes. So fixtures, and basically they were paid for by check. So the amount of money in the bank reduces, we credit. Fixtures is an asset. This one increases. We do what? We debit. So we debit fixtures, we credit bank. We credit what? We credit bank. We credit a bank. We credit bank. So therefore, we debit, we credit bank here. So the date is that year of June 2020. So the other entry is in fixtures account, an amount of how much? 3,000. 3,000. And then we do what? We debit the fixtures here. So that here. And then the other entry is in bank account, 3,000. So we are done. We are done with recording those transactions. We are done with recording those what? Transactions. So if you're together up to that point, I want to show you how to balance this ledger account. Maybe you can just confirm whether you're together up to that point so that we proceed to balance this ledger account. Are we together up to that point, Eroto? I want us to move and basically we record, we balance this ledger account. 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 Yes, a question, Eroto? Or you want to copy this? Yes. Okay. Anyone else who is copying the question? Anybody else copying the question? Anybody else copying the question? Other than Eroto? Okay, so Eroto, then I give you how many minutes? 2. Okay, so once you're done, let me know. Once you're done, let me know. Yes, I hope now you're done. I hope you're done now. I hope you're done. I hope you're done now. Okay, sawa. So basically, let me show you how to balance the ledger account. But basically, the concept which you use in balancing the ledger account is the same concept you are using in balancing the cash book. I hope you can remember the concept. So what were we doing when balancing the cash book? We were getting the total on the debit side, the total on the credit side, and basically here in the total, where we record the totals, we were recording the amount, the amount which was higher than the other. So for example, in this ledger account, the loan, what is the total on the debit? The total on the debit is zero because we don't have any amount there. What about the total on the credit? It is 10,000. So in our totals here, we will record the amount which is more than the other. So which is basically 10,000. So we record it on both sides. So if you add this, it will give us 10. If we add this, it will give us what? 0. It will give us what? 0. So therefore, the difference between 0 and 10,000, we record it here. And basically, we refer to that as what? The balance carried down. The balance carried what? Down. The balance carried down. The balance carried down. The balance carried down. Can you see what you're doing? Sorry for that small interruption. Sorry for that small interruption. So basically, in this case, I'm saying the concept of balancing this ledger account is the same concept we are using in balancing the cash bouquet. And I hope you have seen what I've done here. We get the total on the debit side, which is basically 0. The total on the credit side, which basically was 10. Out of the two totals you get, you pick the one which is bigger than the other one. So, and you record it in our totals here. Let me repeat this one, or basically balance this one so that you understand what you have done. Then there is something else I'll still be able to show you. So what is the total on the credit? The total on the credit is 86. What about the total on the debit? The total on the debit is 11,000. So out of these totals, we pick the amount which is more than the other, which is basically 11,000. We record it here in our totals, 11,000. So basically we know that if we add what we have on the debit, we will get 11. So, but if we add what we have on the credit, are we getting 11? No. So we are getting 86. So what is the difference between 8,600 and 11,000? And 11,000. It is basically what? What are you getting here? Are you getting this one? Betty? Are you getting 24? Maria? Eroto? Yes. So that's basically how we balance the ledger account. But after balancing this particular ledger account, this one I hope you can see, just like what we are doing in case of cash book, we refer to that as balance carried down. BAL carried down. BAL C stroke D. That is balance carried down in full. So now after doing that, you must also have something called the balance brought down. Are we together? And I want you to be very keen here. So once you have the balance carried down here, you need to bring down that particular balance. So you bring it on the direct opposite side and basically record it below our totals. Can you see where I've recorded that? And be able to explain why we need to do this. So we bring down that balance on the direct opposite side. Don't record it above the totals, below the totals. Those are the two rules. You bring it down on the direct opposite side and also below our totals. Those two rules are very important. The same case, for example, this one. We bring it down on the direct opposite side. It will be on this side and also below our totals there. And also our totals. This will be balance brought down, 10,000. I want us to do the same for this other ledger account here. This ledger account. So the total here on the credit side is 8,000. The total on the debit side is 8,000. So you can see these amounts are equal. So it basically means that here we will have 8,000, 8,000. So this will give us 8,000. This will give us 8,000. So basically what that means is that that account do not have any balance. No balance in that account. No balance in that account. Is that okay, Roto? Charles is still here. Charles, are you still here? Charles Akwapa Amadi Potea. Charles, I can see you. Yes, Charles, I hope that is very much clear. Yes. Maria, is that very much clear? Neri? Is that clear, Yusuf? If it is clear, say yes, because I want us now we finalize on this other ledger account. Okay. So we come to the capital account, we do the same. So the capital account, the total here is 50, the total here is 0. So in our totals here, we will record 50,000 on both the debit and the credit side. If we add this, it will give us 50. If we add here, we have 0. So we have a balance carried down here of 50,000. So we bring it down on the direct opposite side. So which will be on this side, that is on the credit side. So we do the same here to the bank account. So for the bank account, we can get the total on the debit, which basically will be 58,000. What about the total on the credit side? The total on the credit side is 13, 21, 21, 20 what? 24,000. 24,000. Maybe you can just confirm. That will be 20, 21, 24. That is correct. So the amount which is more is 58,000. We record it on both sides. 58,000. This will give us 58,000. This is giving us 24. What is the difference? The difference is 34. So this will be balance carried down. So we bring it on the direct opposite side. We bring it down on the direct opposite side and below our totals here. That basically will be balance brought down, 34,000. That is 34,000. 34,000. We do the same here. The total 20,000. The total on this side is 0. So the amount which we record here is 20,000. 20,000 like that. So we have balance carry down 20,000. So we bring it down on the direct opposite side and also below our totals. Balance brought down. Balance brought down. How much? 20,000. So we do the same to this other account here. This total will give us 76,000. 7,600, sorry, 7,600. So, and the total on the credit is 0. So here we will have 76. We have balance carried down 76. We bring it down on the direct opposite side. So we will have balance brought down of 76. And finally, this account, 4,000 on that side, 0 on this side. Yes. Is there a question? So someone is saying joint rates. So no need to worry because I want us to do another question here. Sasa, no need to worry. If you joint rates, we are doing another question immediately after this. Immediately after this. And who is using the name of iPhone? Nani huyo anatumia jina iPhone? This is who? This is what is the name of my student here? Oh, Betty. Betty. Oh, so Betty, no need to worry. No need to worry, Betty. We are doing another question. But basically, I'm saying the reason why that is the rule basically when balancing a ledger account. So if your balance carry down is on this side, Betty, if it is on this side, the balance carry down, the rule is that the balance, the reason why we refer to it as carry down, at the start of the following month, you must bring it down. How do you bring it down? You bring it down on the direct opposite side. That is the first rule. On the direct opposite side, if carry down is on this side, brought down should be on the credit side. And also number 2, the other rule, this brought down has to be below our totals. Can you see that? Below our totals. Don't write it here. Bet here. Don't write it here. Sasa, it has to be on the direct opposite side and below our totals. I hope you can see that is what we are doing in all the ledger accounts. But no need to worry. Once by the time we are finishing the second question, you should understand this concept very well. Sasa, Betty, is that okay? If that is okay, we move now. I want us to finish on this, and then we do another one. Okay. So this balance, therefore, we bring it down. It will be on the direct opposite side, and also below our totals like that. Below our totals like what? Like that. So that's basically how we balance the ledger account. The ledger account. Now, why do we balance the ledger accounts? So basically, we balance this particular ledger account so that now we can be able to prepare the financial statement. Usually, the ledger accounts are basically balanced, usually at the end of the year. So the reason why you balance the ledger accounts is for you to be able to prepare financial statement. But if you can be able to remember from our accounting cycle, we said before you prepare the financial statement, we must first of all come up with something called a trial balance. We must first of all prepare something called what? A trial balance. I want to show you how to prepare trial balance, but even before we prepare trial balance, what is a trial balance first of all? A trial balance basically we say in very simple terms, this is the list of all remaining balances after balancing the ledger accounts. After balancing the ledger what? After balancing the ledger account is the list of all balances, a list of all balances remaining after balancing the ledger account. And basically the balances which you transfer to the ledger to the trial balance, sorry, the balances which you transfer to the trial balance are these balances brought down. That's why I've said after balancing this, you must have brought down. We must have the balance brought what? The balance brought down. So therefore, this is the list of all balances which remains after balancing the ledger account. How do we prepare a trial balance? A trial balance basically do have 3 columns. The first column is called the details column. The other column is called the debit column, abbreviated by DR. And the last column is called the credit column, abbreviated by what? By capital CR. Now, how do we record these balances here? For example, we pick this balance from this account, and we say from the loan account, we just write the name of the account, the loan. We bring the balance brought down here. So the balance brought down, you must check, is it a debit or a credit balance? For example, this balance, take into account it is on the credit side, you record it here on the credit column. We say these are credit what? Balance. And you can see what I've posted here. What I've brought here is not carried down, but basically brought down. But basically brought what? Down. What about, for example, this cash account? Come and write, you say from cash account, just write the name of the account cash, which balance or how much balance do we have? We have a balance of 24. This balance, is it a debit? Is it a credit? It is a debit. So if it's a debit, record it there. Record it what? There. Sasa? Yes. So what I want us to do now, I want us from this question, we basically extract a trial balance. And basically by the end of the day, once you have recorded those balances here, you need to add the total on the debit column here, the total on the credit, and these two balances should be the same. Should be the same. So if those balances are not the same, we say your trial balance are not balanced. And the reason why your trial balance will not balance is because you have made some error. So because once you have recorded now the transactions using the concept of double entry, your trial balance should automatically balance. So therefore, we want us to prepare the trial balance of this business called Mcash Enterprises. This, remember, is the trial balance. The trial balance is that 30th or basically 31st, I think should be 30th of June 2020. So remember, you have said that this trial balance basically do have how many columns? 3. The details column, the debit column, and the credit column. So this is the debit, this is the credit, this is the details column. The details what? A column, the details column. So let's start by posting this particular balance here, the loan account. So we write the name of the account loan. So then we bring this balance, brought down, not carried down, brought down, which is basically on the credit side. We record it on the credit column there. Then the cash. So we have a debit, a balance of 24, which is basically brought down on the debit. So what about this account? Do we have any balance? No, no balance here. So then from there, we can just pick the capital. So capital, we have this balance, which is a credit of 50,000. So we have bank. We write bank there. So bank, you can see we have a debit balance of 34,000. So motor van, we just write the name of the account here, motor van. So you can see we have a balance brought down, which is a debit balance of 20. So fixtures, we have a debit balance of 76. And finally, we have Office Masters Limited. Office Masters Limited. And basically, with a credit balance of 4,000 or forward 4,000 like that. And basically, I hope you can see we are done. We are done. So basically, what now we need to do is we get now the totals. We get the totals. So whatever you have on the debit should actually be the same as what we have on the credit. So what do we have here? This 60,000. This 4,000. That would be 64,000. What about on the debit side? And we add what we have on the debit. On the debit, we have 2,400 plus 34,000 plus 20,000 plus 76. What are you getting here? What are you getting on the debit? What are you getting? Betty, Yusuf, Mary, what are you getting? Betty, I think we have two Betty here. What are you getting on the debit? On the debit column here. Charles, are you getting 64,000? Are you getting 64,000? That is what I'm getting, 64,000. That is what I'm getting. Huh? They're asking about what? Charles, why do we have motorcar? Are you referring to this account? Charles, this account you can see it has no balance. This account has no balance. This account, are you referring to this out, Charles? Charles, are you referring to this? No. You can see, do we have any balance here? So if an account do not have a balance, don't record it here. So remember you have said that this is a list of all balances. So if there is no balance in an account, if there is no balance in an account, you don't have to record that account there. So we only record those accounts which do have what? Balances there. Is that okay, Charles? Is that okay? Okay, sawa. So what I want us to do, I want us to take a short break of just 8 minutes. We come back at 7:10, 7:10, and basically we look on the other question. Sasa, I want us to wind up with this area today. So let's come back at 7:10. So make sure you have the other illustration, which is in the same handout. Yes, so if you're back, we can proceed, confirm whether you're back, we continue. Are you back? I want us to continue. Are you back? Are you back, Betty? Are you back, Maria? Are you back, Charles? Eroto, are you back? If yes, please confirm.